Gold's surge has sparked a debate over which precious metals will lead the next wave of growth. As the U.S. economy slows and inflation rises, investors are increasingly turning to metals like platinum and palladium, which are poised to outperform in a world reshaped by climate action and industrial demands. But here's where it gets controversial. While gold benefits from safe haven appeal, platinum and palladium depend on whether industrial demand can withstand tariff-driven challenges. This dynamic creates a fascinating crossroads for investors, as both metals face unique pressures, yet share a common thread of resilience in volatile markets. The story of platinum begins with China's green energy ambitions. When Beijing announced new targets for renewable energy, platinum prices jumped by over 3%, hitting a record high in 11 years. This rally mirrored investor optimism about President Xi's pledge to cut emissions and accelerate clean tech adoption. The metal's future looks brighter as new energy vehicles become mainstream in China, with hybrid cars requiring heavier platinum group metal loads in catalytic converters. Meanwhile, hydrogen fuel cell systems are gaining traction, especially as China's push for cleaner energy accelerates investment in this transformative technology. Chinese automakers' stockpiling of platinum since May 2023 has already supported prices, reinforcing the case for continued buying. With supply concentrated in South Africa and Russia, even modest demand increases can drive prices upward, explaining why platinum is currently riding the gold and silver rally. Platinum's dual role as a precious and industrial metal adds another layer of intrigue. While gold corrected as Fed expectations shifted, platinum drew strength from tangible policy commitments. Investors see green energy adoption as a structural driver, positioning platinum and silver as key beneficiaries of China's climate transition. Technical analysts note that platinum has formed an inverted head and shoulders pattern near $625, a sign of strong long-term momentum. The pattern, which began in March 2020, saw the head drop to $562, with shoulders forming around $790. The neckline broke at $1,200, triggering a surge toward $1,700 resistance. This bullish trend underscores platinum's potential to outpace gold in a market seeking sustainable solutions. Palladium, though less prominent than platinum, shares critical ties to automotive and industrial sectors. As the key metal in gasoline catalytic converters, it faces pressure from stricter emission standards in China, Europe, and the U.S. While its demand grows with the green transition, rising costs have prompted some manufacturers to substitute palladium with platinum, slowing demand growth. However, Russia's dominant position in palladium supply, over 40% of global production, raises concerns. Geopolitical tensions and sanctions threaten to disrupt flows. While South Africa's mining output has been hampered by power shortages and logistical challenges, a sudden disruption in production could tighten markets and push prices higher, creating a precarious balance between supply and demand. Technical analysis reveals palladium's potential for breakout moves. The metal has formed a major rounding bottom pattern since the 21st century, with a V-shaped recovery in 2016 completing the bottom formation and triggering a surge above $1,100. This move pushed prices to a record high of $3,433 in March 2016. Yet supply risks remain significant, as both metals are concentrated in South Africa and Russia, where power shortages, labor strikes, or sanctions could disrupt supply chains. Long disruptions could create volatility, but sudden surpluses from substitution or recycling might also pressure prices. Final thoughts. Platinum and palladium are entering a critical phase in the precious metal cycle, as gold and silver have already surged on safe haven demand, drawing investors back into the sector. The high inflation environment, growing economic uncertainty due to tariffs, limited supply, and expanding industrial use position these metals for the next move. Platinum benefits from substitution trends and its role in green technologies, while palladium remains vital for catalytic converters. From a technical perspective, gold has initiated a surge toward the $3,900 to $4,000 region, while silver has reached its long-term resistance near $50. These broader market shifts have pushed platinum prices toward $1,700 resistance, creating a strong technical structure for both metals. Investors can consider buying platinum and palladium on dips and looking for the next move higher. If you'd like to know more about what drives precious metals prices, visit our educational area at https://www.fxempire.com/what really drives gold, silver, and precious metals prices 1526505 https://fxempire.com/what really drives gold, silver, and precious metals prices 1526505